President for Finance and the Group CFO and Corporate Head at Escorts, Kubota. Thank you so much for being live with us. Let's get straight down to it. Like I was just saying, we had seen price hikes by Escorts. It was to protect margins. Now what we've seen is a loss in market share, and I think that is what the street is really trying to grapple with. Going forward, what is it that you would like to say? There are reports coming out which are saying that channel checks are showing that Mahindra has gained shares. Regional players have also gained share.
Hi, good morning. Yeah, so I think, as you mentioned, so there have been some disappointment on the market share front. So there are certain pockets, especially strong markets, which came as a real surprise in certain pockets like UP and Bihar, which was a stronghold for us, where some drop has happened in the market share. So we have been looking into the reasons what has happened and what's gone wrong, and obviously there are corrective actions which have been put into place now in the last 2 weeks. So we hope we should be able to get back, to the normal margin levels which it was. And I can tell you this nothing to do with the price hike. The price hikes have been in line with what the industry took. We didn't do any extraordinary price hike, and this is a normal trend. And even now, the industry is carrying some underabsorbed inflation, and it's the same with us. So that has nothing to do with the market share gain or loss, but there were certain, obviously, I think, disruption which has happened in certain pockets, especially in a stronger market, which the company is cognizant of, and we're taking corrective action to make sure it gets corrected in the balance of the months.
Okay, so the price hikes have had nothing to do with the loss in the market share as well, particularly in the north and east, which is typically, of course, the company's stronghold. But building forward from that, you're saying you will regain it. Can you tell us a little bit about how that's going to be? Should the street expect that it'll be gradual recovery of the lost market share? You, of course, have Kubota also now with you, so a lot of tech expertise.
So the Kubota integration has yet to start happening. So obviously it will be gradual and slow. So the movement will happen on that front too. I think both on the product side as well as on the tech side. But I think the action which we are talking about is more in the short to mid term, which the company has taken. So it's cutting across all categories. It's on the channel side, on the trade policy side, on the product rationalization side, versus what was selling and what is not selling. So I think it will be a mix of all factors, which have been put into place now in these pockets. So that's what I think we think we should be able to really get back, and we don't see a major issue really in terms of the brand loyalty for the customer perspective, which can actually be of any concern. So I would say this is more, I think, the short-term impact which has been there, and the corrective action the company is proposing now. So we should be able to really get back to the normal levels.
Bharat, there is a fear in the market right now that the company is going to sacrifice margin gains in the near term to try and gain back market share. Is that valid?
No, I won't say that, because what we are doing is going to be in line with industry. So we're not going to go for aggressive any incentivization or discounting for the products, to gain market share. So that has never been the strategy which company will follow. But yes, in the past, there was more focus on the margin also, because as you would have seen in the last 5-6 years, I think the company has really turned around on the profitability front. So that was one of the focus area. But now I think besides, there will have to be a correct balance between, the right level of profitability versus the market share. I think which is what the company's, the mantra is going to be going forward, in the next midterm, I'd say.
The other thing, Bharat, I wanted to understand was what happens to Kubota, Escorts, synergies, because they're yet to play out. So the market is wanting a little bit clarity on the same.
So the integration, like you said, is yet to happen. So right now, as we mentioned in the past, company is in the process of working out a midterm business plan, which internally we expect should get approved by September, and then in Q3 we should be able to make it public. And post that, I think once the merger happens with the JV, so the real integration work will start happening. So right now they're still operating as a separate entities, and the process is on. Maybe another month or so, we should be able to really, take that forward too. And then the things will start working on. So the real integration strategy will be working on now in the second half of this year. Once the midterm business plan is through, and then I think we'll get down to the execution part in terms of how best we can do that.
A lot of brokerages have cut their earning estimates for FY23 and FY24 by 20 to 25%. Do you think brokerages are being overcritical here?
Well, in the short term, we do expect there is an impact in the margin because the inflation is still there and there's still unabsorbed inflation, which we've seen in the first quarter, where the impact has been very high in the margin. And that will take some time before we at least stabilize. We expect only by Q4, I think we'll be able to go back to the, normal level of margins. And so next year, we don't see an impact really on the margin front. So I think it's more short-term in nature. So maybe, yes, next quarter or two, depending on how the deflation really plays out on the commodity side and how well we are able to really squeeze in back from the suppliers. But otherwise, I think in the midterm or in the next year, we don't see the major impact will really happen on the margin front.
What are the macro factors at play? This time, the sowing season has been slightly delayed. We also understand that there has been a pronounced rural slowdown, at least in the quarter gone by, which could have affected affordability. Are these macro factors a real headwind for you?
So definitely, I think monsoon will play a big role. So you're seeing there's certain pockets, especially in the eastern side, in the Bihar and certain pockets where the monsoon has been slow. So that will impact the paddy belt, which is the highest sowed grain crop in the country. So definitely, kharif output will have some concern. But even if the monsoon is good in the balanced parts of the country, which are more rain-fed, so we expect second half can actually see a better, outlook for the industry. And we are still hoping the industry this year is likely to maybe still register a low to mid-single digit growth, compared to last year.
Okay, so that's Escorts Kubota for you. Stock price in the slow lane today, reacting to the earnings. The street disappointed primarily by the market share loss, falling to 9% odd, especially in the north and east, a stronghold of the company. But as you're hearing it from the top management, there's going to be a slow and gradual recovery as well. The margin pressure may be there, but it's only short term. Going forward, things should get better. Thank you so much for joining us live today, taking us to the earnings fine print and, of course, the outlook going forward.